Anyone who has an idea what a dividend is? I think we did talk of dividends a little bit earlier. So pretty much if you are in a financial industry, the biggest words that you're gonna hear should be stocks, should be shares, should be equity, should be CFDs, should be dividends. What else? Yeah, should be stock markets. You know, those are the words that you get, right? Which is we're talking about stocks. All right, I can see the inbox. All right, yeah, correct. So the dividends pretty much is the profit or a loss that the company has made that will be shared to the shareholders based on how much they have bought that type of stock or that type of a share at what particular percentage. So you hear the previous column, it says when you buy 1,000 shares, you actually have a 10%. When you buy 1,000 stocks, you actually have a 10% share of that company, right? So similar to that, when let's say you buy you know, 1,000 shares, 1,000 shares at one of the stock company, which is, let's say, Universal, and the Universal start producing a good music, a lot of people buying from Universal. The share price, the stock price of Universal on a stock exchange moves from 100 rand all the way to maybe 5,000 rand, right? That means at the end of that period or that session, the session that you agreed, whether it's a month or whether it's 3 months or whether it's 6 months, there will be the dividends. The share, the profits that they made should be divided to the shareholders based on their percentage. Now, what happened if the company lost? The company loss that actually made at that particular point, it will also divided to the shareholders. So if you lose 2% out of your 10%, it means your money, the one that you bought the stock with, the value will drop a little bit. You have a little bit of, you know, percentage drop based on the percentage and amount of money that you buy on your stock and how much that particular stock is being, you know, sold in the market. All right, guys. I see people are joining in now. Don't worry, guys. If you're joining in now, we're not late. There's 10 more minutes before the Zoom cut. Please rejoin again so that we can finish this. Please rejoin again if it cuts anytime, but we still have, I think, 10 more minutes. So, however, if the company decreases in the value, the share price would also fall, and the position may result in a loss of your initial investment. So you can now be able to lose also the initial investment that you buy your share or in your stock market. So no one should ever lie to you that you can only make money in stocks or shares. You can also lose. You just have to understand or to know what particular stock you have to buy at that particular time, which one it moves. Recently here in South Africa, I can give you an example of Cartrack. I think Cartrack, when it's coming in 4 years ago, 5 years ago, the share price was costing around 120 rand to buy it on a stock exchange. Now the share price has gone all the way to 15,000 because they've been making, actually, they've been growing. A lot of people, they've been joining Cartrack, you know, getting the tracker. They actually even getting all the way to list themselves under NASDAQ, you know, under one of the tech indices, the biggest tech indices in the world. So that means they are actually making a way good profit for themselves, the Cartrack. So yeah, if you are a person who's looking to also check on the stocks and buy stocks, check on Cartracker, Google it, see how much it costs at the moment, and you can jump in. All right, so far so good. So alternatively, some traders may choose to speculate on the future value of the asset without taking ownership of it by trading financial products such as CFDs. What are CFDs, guys? Anyone? CFDs. What is the meaning of CFDs? Here it tells us that alternatively, some of us as a traders, we can choose to speculate on a future of the value of the specific asset without actually taking the ownership of it. By doing that, we can only do that by trading a financial product called the CFD. So you can only speculate the future of the assets or the future of the company by only trading CFDs. So if you're trading, if you're buying stocks, if you're buying shares, you're not going to be able to speculate. Now the question is, what are the CFDs? You can unmute or type it on the chat. No one? No one knows the meaning of CFDs, guys. I'm very disappointed. Especially those who join every week. CFD is supposed to be the simple one. All right, no problem. So a CFD, C, it's a contract, F for D, differences. All right, Raymond got it, contract for differences. So it's a contract for differences. What you guys, the reason why you guys you tune in a Zoom like this with me is because of you trade CFDs, because we concentrate on CFDs, although today I just take the left hand, talk about the stocks. But when we normally trade, you and me, and talk on the Forex market, the one that called Forex, that's the CFDs. So some people, instead of buying a specific share of a specific company, they actually speculate the future value of that specific asset. So they speculate whether the value of this asset, it will drop, or the value of this asset, it will go up. That's what we do when we are trading in the Forex market. We are actually speculating the future of that specific instrument that we are trading. All right. This commonly used for more short-term strategies. Although you would own the underlying shares, you would be able to short a stock or short or selling. So you could benefit from declining of the share price, not just a rising one. So not only by rising where you can make money, you can also make money by a fall of the specific stocks. So it's very nice when you are trading Forex, trading CFDs. You can make money every day. You can make money whether the market, the stock is gaining, whether the stock is actually losing in the market. It is important to remember that when the trading CFDs, you are trading with a leverage. This means that both your profits and the losses are magnified, and your losses can exceed the deposit. It's because of the leverage. Any questions? Welcome, Eugene. Kudzai is there, so welcome, Kudzai. Any questions so far, guys? All right, don't forget, we still have 3 more minutes, and then it's gonna cut. Please, man, rejoin again so that we should finish the session. Okay, where are we? Here. So why do companies list themselves on the stock market? If someone can tell me, why will you open your own company, the Forex market based, and decided to, listed on a stock market? Anyone? I'm sure a lot of people here, you want one day to own a specific company, and you would love that company to be public, to be able, to list it in a stock market. But why would you do that? All right, I think I did explain a little bit before that the reason why, or the most popular or primary reason that you and me, we can have a company and listed in the stock market, it's in order to raise the capital. So if you don't have, if you're a huge company, you're a big company, because small companies, you cannot be able to, to list it in a stock market. It's expensive to list in a stock market. So already you need to be you need to be big enough so that you can be able to be listed on a stock market. And again, once you are big, that means you are actually looking to tap into huge markets, into big markets. What you normally do, it's list your company on the stock market so that a lot of people, a lot of public can tap into your company, can now start buy a specific share, a specific equity. So it's like you are tapping in on the equity market by selling their shares to individual investors and an institution. So it can be organization can buy certain share. It can be the company that is making the profits and decided, okay, this profit, I'm gonna take it and buy a specific stock to this stock market. Can be you and me. We are trading CFDs, decided that, hey, I make so much money on the CFDs. Let me divest my portfolio. Let me take this stake and buy a stock price, buy a share at this specific stocks. That's pretty much the reason why a lot of companies, they do list their companies on the stock market. This is an alternative method to gain a capital privately via a venture capitalist. Most companies will list on a domestic exchange. So for example, if you are in UK, most shares are listed in the London Stock Exchange. And alternatively, there's a company called Alternative Investment Market, AIM. I'm sure you've been seeing a lot of new TVs, smart TV, they're written AIM. Those are a company called Alternative Investment Market. They list companies so that they can be able to be in the stock market, and you and me can be able to buy a specific